Good afternoon. You're watching Businessworld live here on One News. I'm Jess De Los Santos. Let's take a look at how the local bourse closed today, Thursday. If you thought yesterday's 2.3% jump was already impressive for the local bourse, think again. The benchmark today made a 5.1% surge to zoom its way past 6,600. This is the biggest rise yet for the main index since November 10, when it soared as much as 5.25%. It was already gaining at a steady pace of 3% early on in the session, as you can see in this chart right here. But as was the bourse's won the past couple of weeks, another last minute rally pushed shares higher. Now, according to Jonathan Ravelas of BDO, this is investors actually saw the market holding up, and that could have attracted more placements at the latter part of the trading day. Now, this on the heels, of course, of increasing possibility that mobility curbs in the national capital region and surrounding provinces will be eased. Of course, currently, GCQ with heightened restrictions will be expiring this week or at the end of the month. The health department itself is saying that general restrictions, quarantine restrictions, can't stay too long. They said that the bubble has already met parameters to ease limits. The DOH said it's working with LGUs to increase capacity in mitigating spikes so that NCR Plus can safely reopen. Now, again, once again, local stocks now at 6,666.14. The last time it was even near that level was back in April. It's now a 3-day rally for the index that's been up by 8.1% over that period. That more than makes up for what has been a bad year so far for the index. I mean, the past couple of days we've been seeing the index down by as much as 12 to 15%. But after that rise, the PSEI has tempered its losses year to date to 6.65%. Question is, does this rally have legs? Well, according to Manny Cruz of Papa Securities, there's still room for this rally, but it will depend on the government's progress and its promised pace of vaccination and keeping control of the pandemic. Should there be good progress, Stephen Cochrane of Moody's Analytics says that could help increase chances of recovery in the second half. He did say during our broadcast early this morning that as for the second quarter growth, GDP might come in flat or even down by a little. He says pre-pandemic growth might have to wait until the end of 2022. Businesses positioned to gain from the further reopening of the economy made hefty gains today, led by consumer and property stocks here, particularly JG Summit. Look at that, up close to 12.9%, now at 58 pesos and 70 centavos a share. You also have the likes of Aboitiz Equity Ventures making double-digit gains here, up 11.27% at 40 pesos a share. SM Investments also making quite an increase here, over 7, close to 8%. Really, the same with URC and Ayala Corporation also increasing close to 8%. There's also, of course, the country's biggest mall operator, SM Prime, gaining 6.9%, as well as restaurant operator Jollibee Foods and Ayala Land. Now, sector-wise, as a holding firms and the property space leading gains here, holding firms is up by 7.7%. Property sector, however, on the other hand, climbed 6.1%. Now, speaking of the property sector, even as most workplaces maintain a from-home setup, Colliers Philippines believes landlords should use the time to make headway in creating sustainable office spaces. Is this the new trend in a post-COVID world, especially here in the Philippines? Well, let's find out from their Associate Director for Research, Joey Bondoc. Good afternoon, Joey.
Hi,
Joey.
hi, Jess. Good afternoon.
All right, good, good. Nice that you can hear me. Okay, thing is, why make this push at a time when most offices still do remote work? What are the numbers saying?
Well, exactly, Jess, because a lot of people are now doing work from home schemes, all of these remote work strategies. So, of course, once companies ask the employees to report back to offices, they want their employees, their staff, to be in a green, healthy, sustainable office space because they want to, of course, take care of their employees' health, and they believe that over the long term, being in a sustainable, green, healthy office space will have long term benefits.
Mm. But just to properly contextualize for our viewers, what do we mean exactly by green or sustainable office spaces and towers?
Well, definitely, these are office buildings that provide adequate sunlight, recycle water, adequate space for every employee. Of course, you have these buildings that were constructed with really adequate materials and those that really comply with the global carbon emission standards. So these are some of the procedures that these developers are now implementing: recycling water, make sure that there's enough air circulation, sunlight. So all these features are now being integrated into these green buildings. And as we mentioned in our report, 37% of new office buildings from 2021 to 2023 in Metro Manila will be sustainable and wellness certified office towers. So that's a lot.
But this also comes with the assumption that most offices will be requiring their employees to come back to the office at least in the near term. Are you seeing that happening anytime soon?
Surprisingly, Jess, we see a lot of companies, global companies, even those that are headquartered in the United States, UK, Australia, and other key major economies in the world, China, Hong Kong, and some of them are already implementing split operations. Some of them already asking their employees to report to traditional office spaces on site for 3 days out of 5 working days. So we're starting to see these companies asking their employees to report to offices. It's just a matter of time before these major companies, of course, ask all of their employees to report on site. It is still differs in every country. In Asia, for example, of course, countries that were able to really contain the virus, of course,
Mhm.
are now asking their employees to report on site. But we have clients that are complaining that while their employees are productive, are efficient working from home. It's the engagement, employee engagement, the ability to brainstorm with your fellow employees. And of course, we have these mental health issues amongst employees now, which can only be solved by employees, by workers working with each other and the brainstorming and really collaborating. So we're really looking forward to these scenarios moving forward.
Okay, now I want to circle back to one point you raised earlier. The study says 37% of the new supply up to 2023 will be from the sustainable segment. This is an increase from what level? Where was it previously?
Currently, Jess, it is a very small proportion only of office buildings in Metro Manila. So far, out of the total office space we have in Metro Manila, only between 5 to 10% of this is really sustainable or wellness
Mm.
certified. So hopefully, the 37% share starting 2021 up to 2023 in absolute office space, that's about 810,000 square meters per year. So hopefully that jumpstarts the the implementation, the
Mhm.
adoption of all these green and sustainable office spaces across Metro Manila. But what's good also, Jess, is that we're not just seeing this in Metro Manila. I mean, in Makati, of course, it is a hub for these sustainable office spaces. But we're also seeing this in Cebu as well as
Mhm.
Davao. So we're really looking forward to these new office spaces that are sustainable and healthy over the
Mhm.
next few years.
Well, supply is one thing, Joey, but market demand is a different thing altogether. Are we seeing pent up demand for sustainable offices even amid the pandemic?
Oh, definitely, Jess, because as I mentioned earlier, a lot of companies want to house their employees in a sustainable, healthy office building because they want to take advantage of, the health benefits, the long-term health benefits that they will gain and that they will be able to provide for their employees. But also, we have large multinational corporations that are headquartered in US, UK, and China, for example. And of course, these countries are complying with global environmental sustainable standards. And if these countries, parent firms, are headquartered in those countries, we expect their subsidiaries, okay,
Mhm.
in countries such as the Philippines, to also be housed in the sustainable and wellness certified office building. So they have been mandating their units, their subsidiaries here in the Philippines. And definitely, this is one trend, one demand that we should really look forward to. And developers, landlords should really capture and be on the lookout for this demand over the next few years.
Okay, and lastly, before I let you go, what should be the strategy here then for developers, especially since there's a more common notion, that
Well,
going green is the more expensive route to take.
Well, of course, for developers, all they have to do is highlight all the long term health and cost savings that tenants will be able to get or yield from these sustainable office spaces. Of course, landlords have really been maximizing these benefits. They've been conducting a lot of webinars saying that there might be some upfront cost, initial cash out or higher fees. But of course, if you look at the long-term benefits, especially the utility cost savings, the health benefits that you provide for your employees moving forward, definitely you'll be able to get more from these office spaces. So this is one strategy that landlords have really been implementing. And all the new office towers that we're seeing now across the metro and major business hubs, Metro Manila, Cebu, and Davao, they are being built and are also being provided all these green benefits. So developers should really not just build office buildings that are healthy and sustainable, but also be on the lookout for this demand, pent up demand for sustainable, healthy office spaces moving forward.
Okay, so at least some trade-off despite the upfront cost with going green. Thank you very much for your time this afternoon. Associate Director for Research of Colliers Philippines, Joey Bondo. And while we're still on the topic of real estate and office spaces, today's Business World Economic Forum discussed the post-pandemic future of remote work as well as the traditional office. Now, Shaila Francisco joins us live for a recap of today's event. Shaila, how did things go?
Just real estate developers and consultancy firms know that a hybrid work setup, which mixes both home and remote work, is here to stay. They say both arrangements are needed to improve operations. Stakeholders agree that the COVID-19 pandemic has forced some companies to adopt a work from home strategy to sustain operations. But in today's Business World Economic Forum, real estate consultancy firms and developers say the office setup will remain. Some businesses explain remote working has exposed limitations, such as unstable internet connectivity, finding motivation, managing routine, and difficult working conditions, especially as some businesses in the country work 24/7 to support the world's businesses, such as BPO. KMC Savills estimate traditional space to dampen by 10 to 15%. However, speakers are unanimous in the opinion that remote setup is still needed for ease of access to work and avoid the risk of contamination amid COVID-19. Ayala Land Offices says traditional space and remote setup each have significant trade-off, and the way to move forward is to sustain the flexible setup. JLL, the tipping point of hybrid work based on their survey, is 3 days in the office and 2 days at home, and efforts will be successful only if it is supported through the technology. For WeWork, the setup will allow companies to take away real estate as an investment on the balance sheet and turn it as an operating cost, which can be used to invest in other areas of growth. A study survey conducted by WeWork and IDC shows 70% of organizations in Southeast Asia are planning to leverage flexible workspace in the next 2 to 3 years. The firm believes Philippines could lead in this emerging setup. Aside from a young workforce that shows appreciation for hybrid setup, the firm highlights the country's strong economic fundamentals.
Meanwhile, interest in the Philippines is robust and long term. The very strong underlying economic fundamentals there before the pandemic, they're still there. How do we know this? Look at the other major metropolitan real estate markets around Southeast Asia. Look at Jakarta, look at Kuala Lumpur. Their drop in office vacancy rates has been about double that of Manila. So, coming back, companies will be hungry for flexible and scalable solutions to support their growth in both the medium and the long term.
Just for now, developers and consultancy firms are offering more options to clients, including flexible leasing arrangements and adopting designs to help adopt to this setup. But more investments is still needed to help sustain this kind of work arrangement. Jess?
All right. Thank you very much for those updates, Shaila Francisco. Now, here are other headlines we're keeping our eyes on. Foreign chambers are backing moves to lower minimum capital requirements needed for foreign retailers setting up shop in the country. The Senate approved a measure last week setting foreign retailers' minimum paid up capital to $1 million or around 50 million pesos. This is lower than the current capital requirement of $2.5 million. However, foreign business groups are batting for an even lower amount, $200,000. According to them, Senate's proposal is still seen as an impediment to new foreign investments. A counterpart measure at the House of Representatives approved the reduced minimum capital requirement for foreign retailers that foreign retailers are asking for. The two chambers are set to convene to reconcile their versions of the measure. Now, around 8% of business establishments remain closed under the current quarantine status in the NCR Plus bubble. The Trade Department says this figure is an improvement from the 16% of businesses closed during the implementation of the enhanced community quarantine last March. Before the surge in cases that prompted a return to stricter lockdowns, the number of shuttered businesses in the region dropped to 4% in February. This is far below the 38% shutdown rate among businesses during the ECQ imposed in April and May of last year. The DTI is now expecting businesses to remain open as COVID-19 situation in the country improves. And those are the biggest stories this trading day, May 27, 2021. Catch Businessworld live again tomorrow at 9:30 a.m. for the market open and 3:15 p.m. for the market close. I'm Jess De Los Santos. We are One News. Mask on, wash hands, and stay safe, Philippines.